talking about all this GME and hedge funds, GameStop stock and hedge funds controlling everything and stuff like that. This one's really fascinating. He says, can the little guy play with the big guy in the stock market? Are retail investors significant, or is it just all manhandled by hedge funds and we're just along for the ride, basically? There's always been this position that the small investor has no chance against big institutions. And I always wonder whether that's the person under 4'8". I mean, they always said the small investor doesn't have a chance. And there's two issues there. First of all, I think that he or she can do it. But number two, the question is, people do it anyways. They invest anyway. And if they so believe this theory that the small investor has no chance, they invest in a different format. They said, this is a casino. I'll buy stocks this month. I'll sell it a month later. Same kind of performance that they do everywhere. When they look at a house, they're very careful. They look at the plumbing. They look at the school system. They look at the streets. They look at the plumbing. When they buy a refrigerator, they do their homework. If they're so convinced that the small investor has no chance, the stock market's a big game and they act accordingly. They hear a stock and they buy it before sunset. They're going to get the kind of results that prove the small investor can do poorly. Now, if you make a mistake on a car, you make a mistake on a house, you don't blame the professional investors. But now if you do stupid research, you buy some company that has no sales, no earnings, a terrible financial position, and it goes down, you say, well, it's because of the program trading of those professionals. That's because you didn't do your homework. So I've tried to convince people that they can do a job, they can do it very well, but they have to do certain things. So in a nutshell, that was like, I mentioned earlier, I think he spoke this and then somebody just typed it. So it doesn't flow very well when I'm reading it. But basically he's saying a lot of people will just not actually do a proper research. If you're buying a house, you're going to look at the foundation. You're going to look at the pipes. You're going to figure out, is the building sound? Are the windows sealed? Is the roof leaking? You're going to look at all these things. In the same way, you need to be inspecting, researching the stocks you're buying. But people will go and be like, oh, I have 10,000. I need to retire. All right, I need to prepare for retirement. I heard about this stock in the news, or freaking Jim Cramer or whatever it is was talking about this stock. 10,000. I'll put it in there. Why don't you do the same amount of research or more? You know, if you're buying a car for 10 grand, you're probably going to do a good amount of research checking on to make sure it's healthy or not. You know, why wouldn't you do that with stocks? And so he's saying that's the reason a lot of people are disillusioned, saying that, oh, the big hedge funds or the robo traders or whatever are controlling the market, manipulating the market. And he's like, dude, if you do the research on the companies you find that you like, and then you like them, and it seems like, you know, they're good stuff, you're going to do fine, you know? And this is actually I think a lot of people will come up to me and be like, dude, why are you doing an investment channel on YouTube? You know, you can never outperform the index funds, or, you know, you can never outperform hedge funds, or you're probably going to lose in the long term because it's like a casino kind of thing. But that hasn't been, you know, my experience in the last, whatever it is, 15 years. And I know people who literally make a living and support their family just doing the stock market. And they didn't start with a lot of money either. So I actually know people here in Japan that do that too, which is even harder, I would say. Yeah, continuing on that last item, Peter Lynch was saying about the big guy versus the small guy in the market. Individual investors or retail investors versus, you know, big funds. So they say, what are some things that the small guy can do? He says the small investor can do three things. They can avoid the market entirely. They can just say, I can't stand it. It's too volatile for me. I'll just put money in the money market funds or in the bank. That's one choice. The other choice is they can invest directly in the stock market by buying stocks individually, or they can buy mutual funds and invest in stock. I think they can do the course of investing in mutual funds, and every now and then they find some stocks. They have a chance they make a big hit. I think the average person could know 3 or 4 or 5 companies very well. They could lecture on those 3 or 4 or 5 companies. If 1 or 2 of them becomes attractive, they buy them. They just can't wake up in the morning and say, now it's time to buy this. Now it's time to buy IBM. Now's the time to buy GE. Now's the time to buy Dow Chemical. Now's the time to buy some biotechnology company. If they don't know something about it, you have to know the story. And people have lots of edges that they throw them away. So again, he's saying the individual investor has a lot of edges over a lot of these funds who aren't actually as free with to do exactly what they want, exactly when they want, as a lot of people perceive that they can do, because they have different governance rules and stuff like that. And so he's saying if you really just focus on 3, 4, 5 companies throughout your life and just kind of buy them at the right time and sell them at a good time, you'll probably do pretty good.